Good evening. My name is Michal Marcus, and I'm the Executive Director of HFLA of Northeast Ohio. Thank you for joining us for our first ever virtual panel discussion, Fostering Economic Equity, Fixing the Racial Imbalance in Consumer Finance. To commemorate this first, we've asked Joe Byrne of See Your Words to graphically record this event, and we look forward to sharing that with all of you. As we watched registrations for this event come in, we were inspired and encouraged by the number of new people interested in learning more about the complex topic. Before we get started, I'd like to take this opportunity to share a short clip that introduces our organization to you.
My mom no longer had my dad's income to help her pay for the bills and fix up the house that they bought together and slowly were fixing up. My dad actually named me executor of his will, so I pretty much had to step up and be him in my family.
I was just renting a small room in another salon, and this business kept growing, and I knew that I had to find my own salon. I had to go and talk to them about what exactly I was doing and see if they believed in the growth of the company.
In 2016, I came to the United States and I came to study for my master's until there was an international transaction ban from Nigeria, between Nigeria and the US. And it was difficult to source for funds and access funds from home and different places.
Upon having the salon for several years, it's always been a huge dream of mine to open up the salon, and kind of going several years and looking at several locations. I found the perfect location, and then COVID-19 happened.
I didn't have any family, I didn't have anybody to ask for money. And now I'm going to study for my PhD, and thanks all to HFLA.
A weight lifted off her shoulders, that he no longer has that big of a debt.
I got approved, and that really helped me stay afloat and have that security that I wasn't going to have to close my business down. It really is an incredibly humbling experience to not only have an organization like HFLA believe in what it is that I have to offer, and that way I'm able to keep my dream alive of moving forward, expanding my business. Because of you, as a small business owner, I realize and know that I matter.
Hearing our borrowers' successes on how such a simple financial tool, an interest-free loan, gave them the power and ability to move forward always inspires me. For over a century, we've provided interest-free loans to Northeast Ohioans who are unable to access conventional forms of finance. Our organization is funded solely through donations. The topic of racial disparity in finance and banking is not new to us. We confront this issue head-on and strive for a future where fair lending options are available to all. Our panel of experts will share insights and highlight actionable steps towards change to support this vision. This event was made possible by the resounding support from our sponsors, our community, and our stakeholders. We are grateful for the expertise of the panelists and look forward to a meaningful and informative discussion for our viewers and community members. In addition to the panel discussion, we are thrilled to present our annual Planting Seeds Award, and I'd like to invite our board president, Laura Kleinman, to join us at this time to present this award to our 2020 honoree.
Thanks so much, Michal. HFLA's Planting Seeds Award was established in 2017 to recognize individuals and foundations that are aligned with the organization's core principles of providing tools to help people help themselves. Our 2020 honoree this year is Michael Taylor. He is the Senior Vice President, West Territory Executive for PNC Bank, and a longtime supporter of HFLA of Northeast Ohio. He provides critical contributions to us and our community and is committed to revitalizing neighborhoods by addressing disparities. On behalf of HFLA of Northeast Ohio, I am excited to present the Planting Seeds Award to Michael.
Thank you so much, Laura. This is such an honor to be the recipient of the Planting Seeds Award. And I can't thank you all enough. It's such an honor to be chosen for this prestigious award. And I'm also excited to have this opportunity to share with you PNC's perspective on corporate social responsibility in our new environment. Corporate social responsibility essentially boils down to doing the right thing to ensure a company is having a positive impact on society, economically, socially, and environmentally. We can accomplish this in a variety of ways, such as through charitable giving, volunteerism, and community activism. But in today's challenging environment, corporate social responsibility is taking a new meaning. As our society grapples with a pandemic unlike any seen in recent decades, our customers, friends, and neighbors need food, shelter, and medical care. We are working with our partners in the community where we do business to determine the biggest needs and how we can help the community overcome those obstacles. PNC has committed $30 million for COVID-19 relief, including $1 million donated to the United Way of Southwestern Pennsylvania to help families struggling with food insecurities during the pandemic. But charitable giving is just one way we can make a difference. We also practice corporate social responsibility through our diversity and inclusion efforts in community development banking and as a financial institution. So let me highlight a few things under these particular pillars. One of the greatest instruments a bank wields is its ability to lend and invest, but it must be used prudently and creatively. As a leader in our community development banking practice, I guide my team every day towards investing in projects that will foster social change. For example, PNC is a national leader in opportunity zone financing in which we can infuse capital into financially distressed communities to create mixed-use developments, affordable housing, and housing for the working class. PNC recently issued a $10 million commitment to provide economic relief to minority-owned small businesses and entrepreneurs in Pittsburgh. And we practice sustainable finance, in which we help customers finance energy-efficient and sustainable projects to move towards a low-carbon community. The pandemic has put an enormous amount of strain on small businesses, which are the backbone of our economy. Early on, we realized the need to step in and help small businesses not only survive, but thrive. PNC provided funding to Northeast Ohio organizations such as our beloved HFLA, Village Capital, ECDI, the Hispanic Business Center, and the Urban League for technical assistance where businesses and consumers can take advantage of one-on-one counseling and connect to expert advice to help with the legal and financial challenges of COVID-19. We also rolled up our sleeves to put an enormous amount of effort into processing the SBA Paycheck Protection Program loans. Our goal was to help as many small businesses as possible. And as a result, PNC was the third highest participant in PPP loans across the nation. And that was no small feat. We reassigned employees temporarily to process applications around the clock. And it became kind of a sort of a friendly competition among my team members to see who could process the most loans. And actually, I had to tell one of my employees probably about midnight to stop processing and get some sleep. And as an extension to that work, we provided $50 million in capital to CDFIs and small business organizations to offer the PPP to their constituency. We're just trying to reach as far as possible into the community. But surely there were many businesses left behind in the process. And if there's a silver lining in the pandemic and PPP, it is that bankers in the community was forced to build better relationships that can enhance small business operations to help them grow going forward. And that means all small businesses in every corner of the community, on every street, in every neighborhood. So how do we make sure we provide the same opportunities to the community of whole? That's where diversity, equity, and inclusion come in. And equity is kind of a new concept for us, but I would say that PNC is embracing it wholeheartedly. I heard D&I being explained in terms of diversity is being invited to the party. Inclusion is being asked to dance. So perhaps equity is being asked to dance to your favorite song. So how do we do it? PNC focused on diversity and inclusion in part in the same ways that we lend and invest. For example, the creation of a line of credit product to help minority developers participate in projects that in turn will create wealth and equity so that their businesses and community can grow over a long term. Equity is built when our employees volunteer in the community and sit on boards in various organizations. For example, when I was the co-chair of the Cleveland Opportunity Corridor Project, our primary role was to ensure that minority participation was in these particular developments. We work with external partners like Mark Joseph, the National Initiative on Mixed Income Communities in Case Western Reserve University, where they have a vision for America in which the next generation of mixed income, racially diverse communities could offer a path towards greater intentionality about promoting inclusion and equity. We are all continuing to navigate these extraordinary times, living amid a global pandemic while coming to grips with the harsh realities of long-standing deep divides regarding racial equity, economic disparities, and social justice issues. So it's especially important that we treat one another with dignity, respect, and kindness. As we ask all of our employees to live our company's core values, which include diversity and inclusion and respect. PSC's implemented a number of initiatives to help achieve this goal. Among them is our $1 billion commitment to extend our support of economic empowerment among African Americans and to end systemic racism. To do this right, whether inside PNC or externally, requires a culture that continuously evolves to suit the current needs of our society. For example, our chairman created the Black Leaders Forum in February. That's prior to the George Forbes situation. This forum brings together PNC African American senior leaders as a think tank that advise our CEO and our executive leadership to understand how to have a larger and more positive impact on communities of color. PNC also continues to empower its employees to explore how best to understand and interact with one another through our employee business resource groups. These groups bring together people who share heritage, gender, sexual orientation, background, interests, or intergenerational connections. With the focus on personal and professional development, these groups enable our employees to better understand similarities and differences so we can work more cohesively and better serve our customers. And I challenge all of you, as you interact with those who have different life experiences and beliefs, think about how your own experiences have shaped your perspectives and be thoughtful. It takes great courage by everyone to speak openly to the truths they have and are experiencing. That courage should be met with respect of listening and the willingness to acknowledge our responsibilities to be able to have a graceful dialogue. The intention is not to make anyone wrong. It's to make things right. Right being that we are all given the same opportunities, the same dignities, and the same rights to live a safe and valued life. So in conclusion, it is up to every single one of us to do our part to drive positive change. We have the resources and the talent. Let's use them for society's advantage. Thank you.
Michael, thank you so much for sharing your vision. I shouldn't be surprised. I had no idea the bank was so involved in so many different initiatives. And we're thrilled for that and thrilled to have you with us this evening. And again, I want to congratulate you for being our 2020 HFLA Planting Seeds Award Honoree.
Thank you so much, Laura, and thank you, HFLA.
So we are now going to move on to our panel discussion. Michal, would you mind walking guests through some of the ways they can engage with our panelists this evening?
Sure, Laura. We know many of you have been working remotely, and perhaps there's some screen fatigue, but equity is a critical topic, not only to the mission of HFLA, but to our society. We want to hear from you this evening, and we have some great ways for you to engage with our panel. Each registered guest should have received our recommendations for the best experience this evening. Your engagement may look a little different depending on the device you're using. We have a technical support line in case you need assistance. For help, you can call 216-545-1284, and one of our team members will be happy to help you. We have both Q&A and live polling, and we hope you'll participate in both. Here's how. If you're watching on your computer, scroll down and you'll see a box to submit your questions or answer our live polls. There is a tab for each. During the live polls, a QR code will be displayed on your screen. If you also have your smartphone, you can simply scan the code using your camera and questions will appear. We will get to as many questions as we can, time permitting. So now let's try a practice poll question so we're all ready. In what city were you born? And I will give you a minute or so to respond. I see we have a lot of New Yorkers here. Cleveland, also lots of Cleveland. So good job, everybody. Thank you for participating, and it was great to see where everyone's from. Now, I'd like to introduce our moderator for the evening. We're so grateful to have Dan Moulthrop. Dan is CEO of the City Club of Cleveland. He was a co-founder of the Civic Commons, a Knight Foundation project creating a social media environment designed for civil civic dialogue. Prior to that, he was the award-winning host of Sound of Ideas on 90.3 WCPN Idea Stream. Dan is a frequent moderator of public conversations and has appeared on stages across the country, including the Aspen Ideas Festival and the Commonwealth Club of California. He lives in Shaker Heights, Ohio, with his wife and 3 children. Dan, thanks for being part of our event this evening.
It's my pleasure. It's a real joy to be here. Thank you so much, Michal, and congratulations, Michael. You're a really inspiring leader, and we appreciate you being a part of this tonight. So I have been involved in creating and engaging in public spaces and discourse and civic discussion for a long time. I'm really excited to get this conversation started tonight. And throughout the discussion, we're going to have opportunities for you to weigh in, and we encourage you to do so, whether that is through the chat or through polls. But we wanted to get you thinking about some of these issues with another poll right now. So here's the question for you. If you were going to purchase a used car for $10,000, what interest rate would you expect to pay? So this is multiple choice. Once you scan the QR code, you'll see the question along with some options. Would you expect to pay 2%, 8% interest, 15%, or 22% interest? These polls are anonymous, so we'll only see your answer. We'll give you just about a minute to go ahead and do that. All right, well, we can certainly see that most of us are coming in with an expectation around 8%, and a couple of responses there at 15%, 0 at 22%, which makes the following story pretty interesting. And this is going to be sort of where we will start our panel conversation. This is a story from a recent HFLA borrower. She was a single mother, African-American, who needed a car, and she came to HFLA for a loan. She was seeking a loan to finance the down payment on a car. And HFLA asked to see the term sheet and was shocked to discover that the proposed interest rate for purchasing the vehicle would be 22.49%, with a biweekly payment of $248. That's over $537 a month. HFLA encouraged her to find a used vehicle for under $10,000 so that they could finance the entire purchase rather than just the down payment. Her car note on a $10,000 vehicle with 0% interest with HFLA was $278 a month instead of the $537 a month for just the down payment. This is one example of a scenario that is not at all atypical. In fact, it's pervasive. And it's a story that many HFLA borrowers looking for a way to help themselves, but they are requiring a lot of financial support to do so. So with that in mind and thinking about that scenario, let's welcome our panel. Nick Bourke is Project Director for Consumer Finance at Pew Charitable Trust, joining us from Washington, D.C. Hey, Nick. Sarah Chenven, Chief Operating and Strategy Officer at the Credit Builders Alliance, is joining us from Portland, Oregon. Mark Joseph, who's already been mentioned and name-checked at least once in Michael Taylor's speech. He's founding director of the National Initiative on Mixed Income Communities at the Jack Joseph and Morton Mandel School of Applied Social Sciences at Case Western Reserve University, joining us from Cleveland. And Danielle Sydnor, president of the NAACP in Cleveland, joining us from Shaker Heights, Ohio. Welcome to all of you. It's wonderful to see you. We just lost somebody, and now he's back.
Thanks.
And
Great to be here.
I'm glad you're back, Nick, because I wanted to start with you. If you could help us understand that scenario and just how pervasive it is.
Yeah, there are everybody's familiar with credit scores, probably, but it's not just a matter of having a good credit score or a bad credit score. There's a whole spectrum, and over time, these slices of the market have been infinitely broken down by different companies. And so now you have companies, lenders that will focus on folks who have very low credit scores, very volatile incomes. They'll find a way to lend them money, which sort of seems like a good thing if you're thinking about access to credit. But simply getting access to credit isn't enough. The credit has to be fair. It has to be reasonable. The payments have to fit within people's budgets. And unfortunately, there are still too many laws out there that allow lenders to be profitable when their interests are fundamentally opposed to the interests of the borrower. Getting access to their wages, getting access to their income stream, requiring payments that are far too high to make ends meet and allow them to pay other loans or other bills, gets people caught in a cycle of debt. And so one of the things that has to happen going forward is we have to make sure that the laws are protecting people and allowing creditors to operate in a fair way, but where borrower and lender interests are more aligned. And getting there requires really understanding the situation of folks who use these loans, what they really need in their lives, and what's going to make it better.
Nick Bourke, as I said, is project director at the Pew Charitable Trust. And Sarah Chenven, I want to turn to you. Just help us understand, as I asked Nick, just how pervasive this is. It does seem to me to be far more pervasive than many think that it is, or many understand.
Yeah, I just want to underscore and reinforce what Nick said. I think that story of the HFLA borrower was really powerful because it really does exemplify what we refer to at my organization, Credit Builders Alliance, as expense inequality, which you might guess is the flip side of income inequality, and which exists when, among other things, people with no or poor credit, pay more than they should or more than they need to to borrow money, or more than they should, for example, for common essentials like car insurance, or when they need to put down a hefty security deposit for utilities or rental housing. And, due to structural and systemic discrimination, Blacks and Hispanics today are almost twice as likely to be credit invisible than their white counterparts. And as a result, they're that much more likely to experience expense inequality, across the board, which in turn limits their options, of course, for economic mobility. It inhibits wealth creation and often across generations. So, again, I think it is very pervasive. I think, Nick's point was right on point, which is that it's something that happens and exists across the country. There's a lot of targeting, of low-income neighborhoods and neighborhoods of color in particular. And it creates this expense inequality and this sort of structural problem.
Sarah Chenven, when you talk about, when you say that it's pervasive and the structural problem, I mean, is there data that tells us that at a certain point, say, or if you're below this sort of poverty level, I mean, I know it's hard to say like X number, this population or X percent of the population is subject to these sorts of things. But I mean, when it comes to the data, what do you know?
Well, we know that, about 1 in 4 folks across 1 in 4 people living in low-income neighborhoods are credit invisible. We know that, close to 100 million people across the country are either living with low credit scores, poor credit, or are credit invisible. And that correlates very strongly with neighborhoods of color and with the racial wealth gap. One specific example is the Cleveland Federal Reserve study that estimates that it would take approximately 260 years for the average Black family to achieve 90% of the wealth of the average white family. So those are sort of some of the data points that undergird this problem.
Danielle Sydnor with the NAACP, I'd like to turn to you now to sort of help us connect the dots to the broader issues of systemic racism and institutional racism that we've been talking about a lot as a community, and more so in recent months.
Yeah, Dan, I always say thank you when I'm on these types of panels, because individuals like HFLA and organizations don't have to choose these as a topic. So I want to say thank you to McCall and to the board for deciding that this was an important conversation to have. But as you think about systemic racism, one of the pervasive, I was just talking with some friends about the housing market and the role that banks and other organizations and industry really play in upholding things that have for years really kind of put Black borrowers and Latinx borrowers, communities of color more broadly, into a position where they're at a disadvantage. And so when you think about systemic racism, it really just means that it's not necessarily an individual person that's making a decision that causes the problem to be pervasive, but the way that the system is designed, and oftentimes the lacks of checks and balances, the lacks of measurement for data that don't allow people to understand and identify when disparities are taking place. And so there was an example recently of a woman who was getting an appraisal done on her home. And after she did not check the box Black, the second appraisal came back $62,000 higher than the first time she got it appraised when she indicated that she was Black. And so that to me is systemic racism. That means that we have policies and procedures in place that allow a disparity like that to happen. And without her own personal knowledge and awareness to say, let me get a second opinion, she would have been denied $62,000 equity that she should be able to use to build wealth for herself and her family.
That's insane.
It is very insane. And, the article goes on to say about the fact that race and location actually play more of a role in home appraisal values now than they did even in 1980. And so when we're having this conversation in 2020, when we think we've made strides and advancements, what it also means is that what we have done has not been enough, because people find new ways to create the same problems that we've been trying to solve for.
new ways to create the same problems. Danielle Sydnor, you're speaking explicitly about in some way about historic redlining. I'm thinking about Richard Rothstein's book, The Color of Law, which helped a lot of people understand just what happened and how and why that happened through federal policy. And it's deeply troubling to know that at this point in 2020, after so many gains have been made, that still there would be individuals making choices that ultimately set us back in that way.
It is disheartening to think that these things are still happening. But again, I think the remedy for that is that we do have technology now. We do have the ability to capture this information. And so I look at organizations, some that are sponsors of this event, to say, how do we create tools using technology to be able to monitor these types of things? How do we make it easier for financial institutions to do the right thing? It takes a lot of time, energy, and effort to manage data. We all know that. But because of organizations that spend their days focused on bringing us the best of technology, if we were thinking about ways to yield some sort of ROI from them, to me, this is one of those opportunities.
I want to sort of hang on to that idea and return to it a little bit later as we push the conversation towards solutions. But there's a really important question: how do we leverage tech? How do we leverage data? And how do we leverage our know-how to tackle these big problems? Mark Joseph, I want to bring you into this conversation. You work at the intersection of so many things that ultimately get summed up in the word equity. And the story, the scenario that we started with, what does it say to you, and how does it connect to the work that you're doing?
Thanks, Dan. I also want to thank HFLA for hosting a conversation focused on this word, equity and economic equity, racial equity. I also want to give a shout out back to Michael Taylor, my friend, colleague, and mentor, who's been such a great supporter, and to PNC for their support of our work on promoting inclusive, equitable, mixed income communities. As everyone heard Michael say, the word equity was new to PNC. They're living into it. They're figuring out what it means. And so I thought it might be helpful to step back a little bit and just help our audience think about the word equity. It's something we're hearing a lot these days. But as I started looking around for definitions of the term that could be actionable, I had a harder time. And so I want to try and parse the word equity a little bit using a framework, and then also maybe giving an analogy, and I'll try to do that relatively quickly. So the framework I use for racial equity has 4 parts: curiosity, structure, perception, and belonging. Curiosity meaning, can we approach issues of race and racial equity with an open mind? We tend to come into these issues and all of us have our minds set in a certain way. And so I think curiosity, and particularly empathetic curiosity, what would it be like to find out your loan was going to be 22% interest rate, right? How would that feel? So curiosity. Structure, we've already talked a lot about. And Nick and Sarah kind of kicked us off with some of the structural issues, and Danielle added to those. I think the other 2 are ones we don't bring into this conversation. Perception. So to what extent are there issues of stigma? Are there issues of kind of mindset? Are there issues of a certain kind of narrative about who makes a credit-worthy borrower and who doesn't? And then belonging, I think, is a critical piece of this. Who feels like they belong? Who feels like they are included in mainstream banking, mainstream finance? Who has the right to walk into a bank and ask for a loan? So I think those are 4 concepts we might come back to. Real quickly, let me give you an analogy that I was thinking about today as I was thinking about this panel, and that is, imagine what we're trying to do with equity is get everyone to the same starting line in a race. And the reality of our status quo, the way things are today, is we've got some folks at the starting line. We've actually got some folks who get a head start in this race. And we got a bunch of folks who start the race way behind others. So we can think about equity as like, how do we get everyone, whoever's up furthest on that line, how do we get everyone up to that same starting point? You still have to run the race, but we just want you at the starting point. And you might think if we get everyone there, that's enough, but there's more. If you get up to the starting line and the people next to you have the fastest, best shoes, and you're running in a pair of sandals, you're not going to do as well in the race. So is everyone equipped? So what would it mean to equip our borrowers with the same resources that they need to run the race? That's still not enough. If some people at that starting line are confident and feel very sure, I'm meant to be here. This is my race. I got this thing. And you got other folks at the starting line who are like, I'm not sure I'm meant to be here. This feels like the wrong race. I don't know. They're probably not going to perform as well. And then finally, not to stretch the analogy too far, but if there's some people at the starting line who just have the stands packed with supporters, what we would call social capital, and they are cheering for them and yelling for them, and they've given them tips in the race, and they've connected them with other runners. And then you got some people standing at that starting line who have no one there. There's no one in their corner to support them, to yell for them, to connect them. So I think there's all these layers that go into equity. And so I hope that our audience can begin to pull those apart and think of ways that they could really help to address each of those as we move forward.
I think it's, Mark, I think that that starting line analogy, the race and all of that was Lyndon Johnson, right? At the beginning of the civil rights era, and who sort of made that analogy and talked about how unfair it was then to bring somebody in shackles to the starting line and remove the shackles and say, you're good to go. And you've really just added a whole like 6-7 other dimensions to that. And I really appreciate that. I want to hone in on this idea of what it means to be equipped, though, because I think Sarah Chenven, from a credit builder's perspective, that idea of building credit, knowing or starting out and knowing what credit is and what it means to have a credit score and how the kinds of doors that could open, that is a big piece of equipping people to participate in their own financial future in that way.
Yeah, I think that's a great point. I think Mark's analogy is a really good way to also look at the credit reporting system, in that, currently credit scores do not include race as a factor. That's not a part of the algorithm. And yet we see these incredible disparities, and we still see a lot of disparate impact. And with individuals, when you look at credit building as a solution for people, it's a very individual solution. It's a very, sort of to Danielle's point too, it's a solution that allows individuals to, with certain knowledge, to attain certain knowledge, if they have access to certain resources, and then they have the capacity to execute certain actions, then they're able to build their credit scores regardless of who they are. However, when you look at sort of the multifaceted, complicated ecosystem in which they live, it's really not. It's really sort of a Band-Aid solution, if you will, to a larger systemic problem that requires, I think, additional focus on root cause. And I think it's very complex, but to get to that starting line, it may be possible to get to that starting line, but there are so many layers of challenges. Even when somebody is at that starting line, to Danielle's point, there's still systemic, discrimination out there that will negatively impact folks. They will experience disparate impact whether or not they are at that starting line or not. So I think that's a real sort of larger ecosystem challenge.
Yeah, Sarah, I want to underscore something that you said about the fact that that race isn't officially factored into credit scores, but it's very much present in credit scores. And while it may not be explicitly factored, it is definitely a determinative factor in many cases. I wanted to, this issue of Mark, that you brought up about perception and mindset and belonging. Danielle Sydnor, the story you relayed earlier about seeking a second appraisal, and is the kind of sort of fact pattern that would make somebody feel like, oh, this system is not set up to make me feel as if I belong in it.
it a question for me? I'm sorry, I wasn't sure if it was me or
Yeah,
Mark.
it's a question for you. I was name checking Mark because that's kind of what I do sometimes. But
Trying to give me all of my hookup. It's okay.
Yeah, we all. But the story that you relayed earlier is one in which it really is clear that the system is not set up to say, yes, you belong, yes, you matter, yes, this system is built for you and to help you advance advance your dreams.
People of color are taught that you have to advocate for basic things, not necessarily advocating for extra stuff, but just the things that should be afforded to you. So in that example, what it demonstrated is understands that be a barrier. And I think the thing that, as a Black woman that's navigated so many spaces where I'm sometimes, you always have this kind of gut feeling of like, is it happening to me because I am Black? Is it happening to me because I am a woman? Is it just the system itself? And so when you're faced with things that feel a little bit off, you're eventually taught that you have to question them and you have to do the due diligence until you prove to yourself that, in fact, it did happen because of your race, orientation, and things like that. Or it simply was, your house just wasn't worth it. But in many times, unfortunately, what we find is that when you start to see smoke, there is fire. And so I think we've learned that we have to be our own best advocates.
Nick Bourke, I want to come back to you for a minute to ask you about the research and whether there are communities that have begun to figure this out, begun to do something better, or forge a path that we can learn from.
Wow. Yeah, there are. But it's hard to kind of choose the right lens which to figure this out. I'm thinking right now about Michael's opening comments, kind of distinguishing diversity versus inclusion. You can look at the diversity aspect of the banking system and say, well, only 6.5% of households in the United States are unbanked. Vast majority of American households have bank accounts. But why is it then that there are some neighborhoods where the incidence of being unbanked is 2 or 3 times the national average? And why do those neighborhoods tend to look disproportionately minority? You can kind of try to grapple with that and say, well, we're not getting anywhere. But I think if you cut the problem down a little bit, there are examples of hope and where people are figuring it out. And I do think that as much as we talk about people who are unbanked or who are sort of living in credit deserts or whatnot, I do think it's worth keeping in mind that the vast majority of Americans, including minority Americans and people who live here, have bank accounts. And some banks are figuring out a way. They're already in the door. How are we going to invite them to dance? How are we going to invite them to dance to their favorite song? They're starting to figure it out. There are some products I could point to. And we're not doing it enough. We need to do more. But there are some examples that I would hope that banks and their regulators start building on. And like I said in my opening comments, I think it starts, I'll go back to something Mark said. I think it actually starts with some empathy. What are the circumstances that people are finding themselves in now? Doesn't matter why they're there. Just understand that they're there and understand what that's like. And if you want to help them, if a bank or a regulator or a philanthropist wants to help them, understand them and start to design better ways of serving that need and making the solutions that you're providing more inclusive. So there are examples out there, but obviously you look at the data, it's not enough yet.
From a practical and tactical standpoint too, Nick, right now there are so many banks that are kind of reinventing what the retail experience looks like and feels like. And, we're bombarded by commercials on television that are telling us it is a brand new world in your retail bank franchise or whatever. But it seems to me that this is a really, as there is this restructuring happening of the retail experience, that the smart banks, the ones that are very progressive and are really thinking about these sorts of issues, are going to be the ones that figure out how to open up branches or retail operations in neighborhoods that are primarily served by payday lenders right now.
Yeah, and the banks have so many structural advantages. People often think about somehow banks being disadvantaged when it comes to serving certain communities, like folks who use payday loans. Banks actually have tremendous advantages. They have a big, diverse product line. They have lots of data. Everybody who uses a payday loan, by the way, has a checking account. You have to have a checking account to get a payday loan. So everybody who has a payday loan is leaving their bank or credit union and going to a payday lender. Why? It's not just because bank branches feel a little bit uncomfortable to some people. It's more that the payday lenders have figured out what people need. They need a loan fast. They need a high degree of certainty of approval. They need the size loan that they want, just a few $100. And they need to get that cash quickly. If banks do those things, and they can, using technology and other factors, they can frankly mop the floor with payday lenders. A couple banks are starting to dabble with that in a consumer-friendly way. I hope more of them do.
Dan, could I jump in?
Please.
Just wanted to link something Danielle said and something Nick talked about. Nick raised empathy again, and Danielle raised this question that comes up for Black people, people of color. Like, did this happen to me because I'm Black, or is this something that just happened? Are we seeing this scenario? Is race in here? And I feel like this is often something that gets put on the shoulders of Black people and people of color to ask that question. And the empathy part, and I think we could be at a pivot moment in society right now, where we've been in a place where I think white people are still hesitant to even raise the word race, or certainly raise the word racism, because they feel like in some ways it could be offensive to people of color or Blacks to say racism. And certainly you get out there and you're in a place without a net. Like, where is this conversation going to go? And one of the things I've certainly become very cognizant of is holding back in conversations to wait to see if someone else will raise it. And I guess that's something I would really encourage the audience to think about, is leaning in, particularly if you're not a person of color, to be the one who names it, to be the one who asks the question that Danielle referenced. Is this happening because is race involved here? I remember a colleague who I looped back to, and he heard me make this point. This is an older white man. And he said to me, Mark, are you saying that it would have been okay for me as a white man to raise the issue of race? And it just was so striking to me that even that would be a baseline question. Like, can we raise that? Is that okay? Is that not a sensitive issue that we should stay away from? So I think that's a key part of it, because as the panel's been saying, this is so structural. It is baked in. And if we're not able to kind of name it and ask questions about it, and if those questions are really on the backs of people of color to do the asking, we're going to move so slowly. And so I think there really is an encouragement to be the one, jump in there, right? Don't wait for a person of color to raise that question, raise it yourself.
Well, Mark, I'll take you up on that for a moment. I don't want to get ahead of you, Jacob, but I've been thinking about that as a researcher. How do I think about race in the research that I do? And one of the best examples I've seen of what you've just been talking about, I think, is when it comes to housing. I think the dialogue about affordable housing and the housing shortage and zoning is starting to evolve in a way where people are identifying that a lot of the root of the problems that we have in the housing market is based in redlining, which is racism. And I've been sort of amazed to see some folks, like in Minneapolis, policymakers, they just came out and said, I think it was last year, we're getting rid of single family zoning everywhere in the city because we have a housing shortage, but also single family zoning exists because of redlining, which is racist. And they've been talking about that. I think it's been pretty remarkable.
That's a great point, and I'm really glad, Nick, that you raised it. I want to involve our audience in the conversation for just a second here and move to another poll question that we've been sort of pointing to and having a conversation around. But I want to ask you right now, wherever you are, to get ready for this question. It is, picture a credit-worthy person and describe this credit-worthy person in your own words. Use about 5 to 7 words. And we're just going to take a moment to interrogate that. This is totally fascinating. And I want to invite you as well. If you have questions for the panel, you can send them in at any time and we will work them into the program. I had to get my glasses on because that was really very small. It appeared very small on my screen, maybe larger on yours. But if you do have questions, please send them in. Sarah Chenven of the Credit Builders Alliance, the responses there, were they surprising or do they fall in line with kind of your expectations of how people typically answer that question?
Yeah, they do fall in line with, I think, how people typically answer that question. I think people, obviously the term credit worthy implies, somebody seeking credit. And so in some cases you see responses, associated with borrowing specifically. But, you saw terms, and I too had a little trouble reading all of the responses, but, you saw things like responsible, homeowner, trying to remember what else, but things that also sort of spoke to not just your ability or your willingness to repay debt, but to sort of who you are fundamentally. And so I think that it's complicated because, to be creditworthy, does mean that you are able to service your debts in a very technical sense, right? But it's a word that imposes a lot of shame and a lot of fear on people who don't feel like they can meet those standards. And so I think it's an interesting catch-22. But short answer is it didn't surprise me.
It does have the word worth embedded in it, right? So there is this idea that if I'm denied that, it's some sort of moral failing or something like that. And I want to connect this back to something that Danielle Sydnor raised earlier about about data and tech and how we might use these new tools, these emerging tools, because credit, my credit worthiness, right, or somebody's credit worthiness should be kind of a mathematical calculation, right, or there should be some very simple metrics that make it possible. But Danielle, I wanted to ask you to kind of unpack those ideas a little bit more that you pointed to.
So I do think that credit worthiness, when you just use data, can actually be challenging, because we often know that algorithms and methods that we use to measure inherently have biases built in. Your prior payment history, and we've described individuals that have normal credit process for a variety of reasons. Some people simply do not trust systems, and oftentimes the Black community and communities of color trust systems that seem to be connected to the government, and for good reason. The government and institutions have been the ones that have, held these communities of time. And so I think that it's something that we have to be able to acknowledge, that while we should be adding in data to these conversations, we should be adding in the ability to use tech to identify, in my opinion, disparities. That's where I would love to see technology come. Can look at a zip code and say all of these zip codes have a lesser return on investment from a ability to look at the equity in a home, for an example, and that this is not an outlier, but this is a pattern and a practice. And by using data to find that information, I think we could come up with some better solutions.
So it's interesting, like I know in the college admissions process, for instance, as they have been moving away from what we have referred to for years as affirmative action, and looking to create these sort of larger portfolios of, and kind of data-driven and demographic understanding of the context in which a student is applying, or from which a student is applying. That there are a lot of data points that we're not taking into account. And very clearly, you could be collecting lots of different kind of data points rather than just, has this person had a credit card before? Like, you're creditworthy if you've had credit before, which means you're creditworthy if you're creditworthy. And that's not very helpful, right? So then what else can we be looking at? And when is it appropriate for a banking institution to sort of apply a different set of rules? I mean, those are the kinds of questions. I'm not even sure which of the panelists, Nick Bourke or Sarah Chenven or Mark Joseph, I'm not sure who should respond to that idea.
I actually would love to.
Go ahead, Mark.
If that's okay. Yeah. I just, number one, want to lift up words that Sarah and Danielle just put on the table, because they're so core. And Sarah talked about fear. And I don't know that the audience showed up tonight expecting to hear about fear, but I think fear is on both sides of this: fear by the lender, fear by the borrower. And Danielle, you put the word trust on the table. And I think ultimately, if we had to boil this all down, lending and borrowing, it's about a trust capital. And so, Dan, to your question, how do you build trust? How do you reduce fear? And so I think it would be a limited approach to trying to solve this if we try to just stay technical with it. And if we just stayed in a question of access and packaging and kind of those kind of levels, I think we got to go deeper. And so what are the ways, the word that came to me as you were talking, Dan, was on-ramp. You talked about, right, you're not creditworthy because you're not creditworthy. So what's the on-ramp? And how do we build an on-ramp for trust building? And how might we think about products or activities, even short of products? Like, you're not even loaning or borrowing it yet. You're like showing up to something educational. You're able to be a part of something, but you have a way to start demonstrating and building trust, again, both ways, right? Part of this is about the lender trusting that the borrower will repay. And I hope that Michal might have a chance at some point to talk about some of the amazing stories of the rates of repayment. If folks look into what HFLA has experienced, right? By taking a chance on people, folks are repaying. So part of it's on the lender, but part of it's a trust thing on the borrower side as well. Like, do I trust this institution to have my business's best venture in mind, to have my family's future in mind, my entrepreneurial effort, right? This is my dream. And yet I've seen so many of my people have their dream crushed. So where's the trust to go around that? So I think part of it is these on-ramps and thinking about what activities and products might lead to that.
And, it comes back to that confidence thing that you said too, right? Like, if you're at the starting line and you're like, I don't know if this race is for me, but it's a different point of view. It's like, I'm not sure if banking, like, I don't feel comfortable in this bank. The reality is that banks need depositors, right? They need your business and my business and everyone's business. And it's in their best interest to bring more people in the door. Sarah Chenven, you wanted to get in before.
Oh, I was just going to say that there is a big push to look at alternative forms of credit data and alternative data and bring that into the credit reporting system, rental payment data, utility data, other types of data as well. But those are some of the more stable types of data, I guess, that have seen some more inclusion on the traditional credit file. And so I think that is those present very interesting and good opportunities for people to start building credit histories without having to, have a credit card, for example. And they don't, they come also with their own share of potential challenges and other issues to sort of consider when you're looking at, who has access to, who can actually provide that data and how they provide it, in a context that is equitable. To Mark's point also, I think that, now I'm trying to remember what the point was. It just went right out of my head. I'll come back to it. Sorry.
Totally come back to it.
Yeah.
Absolutely. We've been getting some questions from the audience, and I want to remind you that your questions are welcome anytime. Our conversation, it's about 6:30 right now, so our conversation is going to continue for another 20 minutes or so. And we really want to make sure your questions get answered. And to your point, Sarah Chenven, about the different reporting, about credit reporting, it's worth noting that HFLA in recent years became a credit reporter. And so, which is a really tangible way that borrowers are able to then build their credit, become quote unquote credit worthy. We need a totally different word for that, but I leave that to the professionals. But to that is a really significant develelment, I think. So,
and
question,
Dan, if I can just.
Sarah,
did
you remember?
If I can just interrupt one really quickly. I remember what I was going to say. You reminded me. To the point about trust, there are organizations like HFLA. There are community development financial institutions, many of which are nonprofit loan funds, meaning they're not depository institutions, but many of which are depository institutions as well. Who have a mission to provide more innovative, more creative, less traditionally underwritten financial products to underserved communities. And so, that is a growing field, but, it doesn't obviously have the market share, to Nick's earlier point, of a lot of sort of traditional financial institutions that may not be CDFIs. But that there are, when we're thinking about solutions, maybe jumping ahead just a little bit, there's a lot of what we see out there is a lot of partnerships between organizations like HFLA, CDFIs out there that are working very closely with more traditional financial institutions to serve as that on-ramp, right? Because they can take greater risk. They're designed to take greater risk. They're designed to serve communities that are not traditionally credit worthy, out of the gate necessarily. And so I think that's a market that that needs even more investment and uplifting.
Sarah Chenven, you mentioned CDFIs. Can you explain what those are for those of us who don't know?
So community financial, now I'm blanking on it.
Development, financial.
Development, thank you. Sorry, my cats are over here very much distracting everything going on screen.
They're just participating. They've already seen questions.
Of course. Development institutions. So CDFIs, they're Department of Treasury designated financial institutions that serve traditionally underserved communities specifically. And again, they can take many shapes and forms. Some of them are not depository institutions. Some of them are credit unions and banks. There's also other varieties, but the CDFI loan funds and a lot of the CDFI banks and credit unions have greater flexibility with those funds to be more creative and to serve less, again, traditionally in air quotes, credit-worthy individuals and small businesses.
Let's bring in some questions from the audience. Here's one, and I'm going to throw it to you, Nick Bourke, but I'm not sure. I hope you're the right person for this. Will banks really open branches in low-income neighborhoods when so much of banking has moved online?
Well, I think one way of approaching that question is, are people getting served by the banks and then the credit unions? And so, I think that it's perfectly possible to look at a situation and say, well, there aren't a lot of physical branches, but the banks are innovating ways to partner with local organizations and have kiosks or ATMs. They have really good online tools. They have mobile apps. Like, it is possible to serve people well without having a physical branch. In some ways, I think part of the problem as we look nationwide, in some ways there are too many bank branches. So I think it's a matter of kind of reallocating where the bank branches are and putting more of them where people are desirous and in need of physical banking. But I think also the banks maybe could stand to innovate a little bit and get away from some of their physical branches where it's not as needed, and put a little bit more of that money into technology and partnership models that actually serve people. So at the end of the day, I think are people getting served? And in a lot of places, as I said before, yes, they're getting served, but you do have these communities where the ratio of unbanked is 2 or 3 times higher than it is nationwide. 15% of the households don't have bank accounts. What are we going to do about that? If it's a physical branch, or if it's a partnership with a CDFI, or if it's a web app or something, there are ways to do it in ways that meet people's needs. And banks, I think, in general, want to find ways to do that, but they need help. And sometimes that help is pressure. Sometimes that help is being called out when they don't have adequate coverage. They may not be aware of that. Banks, as we heard earlier, banks that are doing good things and trying to do good things sometimes are just becoming aware of what inclusion or equity means. They need help. And I think I'm going to go back to Mark's empathy. I'm glad that you brought that up. If we have a little bit of empathy for some of the folks at banks who are trying to design these solutions, and point out where there are problems, and try to help them solve it, I think that's part of the solution. I think they will respond. The question is, will they respond enough? They may need some pressure.
Can I jump in on that too, Dan? Yeah, so the question was, will banks open branches in low-income neighborhoods? I think if we could change that question to, will banks build relationships in low-income neighborhoods? Like, that's the fundamental question. And then it's like, okay, branches, it might be a branch, it might be a presence, it might be supporting the schools and showing up, it might be, there's a number of ways to build relationships that can lead to banking of one form or another. And we happen to have an awesome, I think it's a national model here in Cleveland, the PNC Fairfax Connection building that some people might know about in the Fairfax neighborhood on Carnegie, which is a PNC building in partnership with Fairfax neighborhood. It's not a branch. You can do banking there, right? It has a ATM machine. But really what it is a space for activities and a space where you can come access technology. And so it's a different way of having a presence. It's a different way of building a relationship. If Michael Taylor were on with us, I'd love to ask him any just narratives about, has that yielded banking from folks who have walked in for a reading group or a book club or something in the PNC Fairfax building? Has that turned into, which I think was probably part of the hope, as well as just being a resource for that community. I want to name check Paul Clark, because I think it was his vision originally that led to the PNC Fairfax Connection building, former regional president of PNC here in Cleveland. So it's a wonderful example of maybe not branches, other important ways to build relationships.
Mark, thanks for raising that. And I don't know if we're allowed to call audibles, but I'm just going to say to our partners and all of us, if Michael Taylor, if you're still there, we'd like your answer to that question. Also, so let me move along to another question, one for all of you. If you could create one product or program that was offered on a national level from financial institutions or nonprofits, what would that be? Danielle Sydnor, could we start with you?
Absolutely. So one of the things that Mark's notes here as we were talking was relationships, and this notion of risk that is perceived versus actual. And so when I think about, like, if I could create a product that would have something that would be national, it really is a product to just build relationships. Society is driven off of relationships. I was having this conversation with another leader in our community about solutions for small businesses, and we keep building forms and these apparatuses that require us to label ourselves as Black, do the work to prove it, and then add all this paperwork and hopefully get a contract as a result of it, when the fortunate roles that I've had in community and work white entrepreneurs is they don't have to tell anybody that they're white. They don't have to go through a bunch of paperwork and prove. Not how they're winning business specifically is because they've proved that they are white, but they can go and have relationships with folks that are decision makers. And so if we could create more access for individuals who maybe, especially in communities like Cleveland that are naturally more segregated and they don't do life together, that's how you build community. That's how you build trust. That's how you build business. That's how you build wealth. So I think large organizations could do better jobs of creating a product that creates more relationship between the communities that they serve and the people within inside of their banking institutions.
Sarah Chenven, you're next.
I have a couple of thoughts. My first thought would be, if we're thinking about financial products in particular, something, essentially, in an ideal world, it would be a grant. It would be something that people can access that that gives them some margin, gives their budget some slack that most people, a lot of people are unable to, don't have currently. If it's a credit product, it would be, a no interest loan, essentially, no fee loan that allows people to have that slack and to have that flexibility. And in my world in particular, and this product does exist nationally in different forms. And it also exists locally. It's being offered by a number of different CDFIs and a number of credit unions and even some banks. Is a credit builder loan that is essentially, very, very low cost, if not no cost, that allows individuals to take out a loan. They don't receive the cash up front, but they pay it back. It's held in trust for them. They pay it back over time, and that builds their credit history. And then at the end, once the loan is repaid, or as the loan is repaid, the funds are released to them. And so it serves as kind of a dual purpose product. One is to build your credit history. The other is to essentially act as a savings account as those payments are being made and held in trust.
Nick Bourke, what's the one thing? You mentioned something earlier, which is like the payday loan replacement from financial institutions. But what do you think?
Yeah, it's that. You could also phrase it as a viable alternative to overdraft. I think that one of the biggest black eyes on the U.S. banking system is the way that overdraft fees work. If you overdraw your checking account by $1, they'll charge you they'll cover it, and they'll charge you a $35 or $36 fee, which is a typical fee at banks. Consumers spend, depending on which data you look at, between 20 and upwards of $30 billion a year, on overdraft fees, just to borrow small amounts of money. Now, you could say, okay, overdraft is intended to be a convenience to cover a transaction if you don't have enough money in your checking account. Okay, that happens sometimes, but more than 3/4 of overdraft fees are paid by something like 9 or 10% of consumers. And in Pew's research, 1/3 of overdrafters do it intentionally. They do it intentionally as a way to borrow money. That's credit. And what needs to happen is, and what can happen, is that we start regulating frequent overdraft as credit, and we start providing it as credit. Give somebody $300 or $400 and charge them that $30 or $35 fee. So it's the same cost as a single overdraft, but you get $300 or $400 and you get probably 3 or 4 months to pay it off. That would be an amazing solution. If even a handful of the largest banks in this country started doing that at scale, American consumers would save more than $10 billion a year. And the banks would have a little bit of a revenue stream to replace some of that overdraft fee income that they are hopelessly dependent on right now.
I was going to say, and the banks would still make money somehow. Mark Joseph, one financial product you'd like to see?
Yeah, so I'm going to go off-roading, as you would expect me to, Dan. My product is a curriculum, and Nick just gave me an idea of how to pay for it. So our audience would be familiar with policies like pre-K for all, or P16, pre-K through 16 years, or cradle to college strategies. So my product would be a curriculum that was a financial pre-K for all, a financial P16, or a financial cradle to college. It's crazy how, I don't know how we're expected to learn financial literacy as citizens. You just pick it up along the way. And if you're lucky enough, it goes back to the social capital. Your parents know, your uncle knows, someone that in your life can tell you about interest and about saving and about investments and all of that kind of stuff. What if we started in pre-K and we had a curriculum that introduced kids all the way through at every grade level to financial literacy? We could marry that with kind of a baby bond program where you actually have some real dollars that have been put aside that is growing. And then, as Nick just pointed out, let's fund it with the $30 billion in overdraft revenue that the banks are making, because the reason those overdrafts are happening is a lack of some financial literacy, perhaps, especially if people are doing it intentionally. And so what if we kind of built that in and we didn't wait for folks to be lucky enough to have someone in their life who could help them understand how to work the financial mainstream?
Seems to me too, Mark, that ultimately the win for the banks is in weaning themselves off the overdraft the revenue of overdraft fees, which are, like they can't feel good to the values of the bank. That the win in the end would be more customers, which is ultimately what they're looking for anyway. Let's do another poll right now, because we're pushing towards this question. I want to ask the audience now, I want to ask all of you, what does the future of economic equality look like? Take a minute with this poll. What does a future of economic equality look like? You may also choose to think about economic equity. It's frustrating to not be in control of that because I want to go back through and scroll back through. And I also want to know who wrote me as the answer to that question. It could be you, though. I want to ask our panelists, what'd you think of those answers?
I thought the answers were amazing. You know, I saw some people that said it'll be the same. Some people that kind of called out some very specific things about what the community would look like. A home in East Cleveland appraises for the same value as a home in Lakewood. And I think it starts to really demonstrate how there's a compounding effect on whether we have investment or disinvestment in communities, whether we have folks that have access to good paying jobs that allow them to continue to invest back in their homes, into their neighborhoods, and to access the things that some people look at as things you do with your disposable income, and some folks look at basic needs, like getting your kid a tutor if they're struggling in a class. For some families is a basic need. For other families, it's an extreme luxury that they just don't have access to. And so I think when we look at equitable futures for communities, it really starts to identify what some of us have decided are things that are attainable and others that we continue to still hope and dream for.
Indeed, indeed. I was reminded too, in thinking about this question, what Brian Stevenson says about the opposite of poverty is justice. Let's get another question from our audience. Have larger financial institutions, Nick Bourke, I'm going to throw this to you. Have larger financial institutions explored borrowing circles, i.e. micro-lending, to build trust systems with groups of individuals? Are we seeing this anywhere?
The largest example that I'm aware of comes out of California and Mission Asset Fund. And you know, that's a I believe they're CDFI, a community development financial institution. And it's really spearheaded by their director, a guy's name is Jose Quinones. They have support from banks, but I'm not aware of any banks that are doing this at any kind of scale. A lending circle is sort of a community concept where you have people who know each other or are related to one another in some way, and they help each other save and borrow money by creating a community pot.
You know,
and Nick,
we are.
I can add to that.
Oh, go ahead.
Just thinking, so, you know, my whole background has always been in banking and done wealth management, retail banking, and then worked at a CDFI. I think one of the challenges that a lot of times we miss in some of the explanation of these conversations is a lot of the work that we're talking about ends up being very labor intensive. Margins in the banking industry, yes, they are numerous, but they also are that way because they think about the ways to do things with the least amount of risk and the highest level of efficiency and return. And so when you're doing things that require you to spend 20 hours with one individual to take care of a $1,000 transaction, the math on that doesn't work from a labor. I think this also goes back to why we need other systems and why we have to challenge what institutions do with their profit, while we have to challenge what gets you qualified as CRA credits, because there are more things that banks could and should be doing with their profits, but it doesn't always make the best financial sense when you're looking at what do your shareholders want you to do.
You know, I'm glad you brought that up, Danielle, because there is this tension between what the institution wants and this desire that Mark has spoken about that is essentially about human to human interpersonal relationships. And, you know, Mark, you called out you name checked and spoke of some really important local leaders in banking, but how do you, I mean, I know you're not in finance, but how do you think the boards of directors of banks should be talking about this?
Yeah, and this comes back to something, you know, we've been talking about systems change.
Yeah.
And we often express that, and that's exactly right. Ultimately, that's what needs to happen. But the systems are people, right? At the end of systems, those are decisions being made by people. And so your question about board members, I think it's, you know, what I imagine the conversations are like and the ones I've been in, jump into, once again, a kind of technical answer. right? Like, what could we be doing differently, and what could we shape, and how do we get to the unbanked? And I would say we got to wind that all the way back. And the first thing those board of directors should do is some kind of racial equity training workshop experience together. And even before it's together, like individually, that there's something that they are reading, they're watching, something is unlocking a different way of thinking about all this in their minds. And then they are sharing that and talking about it together and laying some kind of foundation of understanding of kind of how did we get where we are. So again, sometimes we jump in to come up with solutions for problems that we see right now. And there's a lot of statements being made right now. There's a lot of commitments being made right now. There's a lot of billion-dollar commitments being made. I'm not sure they're commitments to figure out how we got here. I don't know that, in some ways I would prefer, rather than a billion-dollar commitment, I want to hear a commitment to the truth. Like, what is the truth about how we got here? And that's a conversation that I think if we can come up with as many solutions as we want, if we don't name what happened and where race and racism, whether that be at a structural level or interpersonal level. So I think I would love to see board members have that conversation, get really educated, and then the things that Nick and Sarah and Danielle are talking about in terms of best practices and who is doing what, and then thinking about, all right, what can our bank do? So I think that's where it starts. And I think often we jump too quickly to kind of the collective technical solution.
I'm like sitting here kind of rubbing my hands thinking about the next conversation where we invite somebody like Michael Jeans, who's on the board of Westfield Bank, to invite some other board members from other banks to have that conversation, to have the conversation about the truth. Because I think, Mark, you know the answer to the questions you posed. Many of us, I think all of us know the answers or some answers to the questions you posed. But unearthing the truth would be definitely a next step in really not just unearthing, but really examining and interrogating. We're closing in on the end of our time together, and there's one more question, which is, which we're pointing to again, which has to do with, forgive me, there it is, the action step that you can take to dismantle structural racism. We haven't really taken enough time to prepare ourselves for that question. And yet here we are, and it's really actually the question that, frankly, I think we should be asking ourselves every day. So I put the question to you, Madam and Sir, audience member. What is the one action step you can take right now to dismantle structural racism? Okay. Thank you all for participating in that final poll. It is, even if you didn't send in an answer, I know it's something that we're all thinking about, and we appreciate your input. We appreciate you taking the time to think about it as well. We are going to end the panel here, and I want to thank Nick Bourke, Project Director at Pew Charitable Trust, Sarah Chenven, Chief Operating and Strategy Officer at Credit Builders Alliance, our friend Mark Joseph of the National Initiative of Mixed Income Communities at the Mandel School for Applied Social Sciences at Case Western Reserve University, and the president of the NAACP, Danielle Sydnor. Thank you all so much for your time. I look forward to, Mark and Danielle, I look forward to seeing you soon. Nick and Sarah, hope you can get to Cleveland sometime. We'd love to have you here. Thank you all.
Great. Thank you.
Thank you.
Thank you.
And now I want to invite Michal Marcus and Laura Kleinman to bring us down, land the plane, bring us to the end. I believe that's
Thanks so much, Dan. And thank you to everyone for such a wonderful panel discussion. This was really terrific. Michal and I were texting a little bit during the panel, and just we're so grateful that we decided to move forward with this tonight, and for everyone's participation. And so with that, I want to thank Dan and Nick and Mark and Sarah and Danielle. Again, you've given us a lot to think about. And so now we really want to thank Jo Byrne for being here with us this evening and capturing this event. And Jo is going to show us what she's come up with, which I bet is a lot, with the graphic recording.
Hi, everybody. I'm Jo Byrne from See Your Words. I want to say thank you for having me. And here are the visual notes I just took.
Now, each guest will receive a graphic recording of tonight's event with some action steps. And if you'd prefer to have a physical copy of this mailed to you, please reach out to us via email. Our team will make sure it gets to you. Now, before we go, I would like to end on one more poll question that will hopefully inspire the audience to reflect on tonight's event. And so, not surprisingly, we'd like to know how you're feeling after this evening's panel. Are you inspired? Are you sad? Determined? Michal, how are you feeling?
I'm feeling hopeful. I mean, we spend a lot of time hearing hard stories and hard places people are in, and I hope listening to the panel and people are coming away and that they're gonna make efforts to make a difference.
Yeah, no, I had a range of emotions, throughout the program. Started a little aggravated and angry with that, article many of us read this week about the appraisal difference, but really began to feel, as we see in the word cloud forming, hopeful. I think there are a lot of things that we as individuals can do to be allies. That was discussed a lot, and there are things that we can do, like vote and work towards making changes in policies. There's a ton of opportunity for us to be making a difference. That's how I'm feeling.
Yeah, and while we're discussing it, I know there was a question about what our rate of repayment is for people who aren't, as we said, credit worthy, which is a word we're not loving, but we have a 97% repayment rate, which is pretty unheard of. Now, our COVID loans, people are struggling a lot right now, and there could end up being a slightly higher default rate, but to date, we are still seeing people who have been given the opportunity to get an interest-free loan want to make good and repay it.
It's that trust that the panel talked about.
Yeah.
All
right.
Okay.
So I just want to thank everyone for being part of this community conversation. We so appreciate the voices and insights of our panelists, along with the participation of our audience. Thank you to Michael Taylor for joining us and for his continued support. And last but not least, thank you to all of our generous sponsors who made this event possible tonight. HFLA of Northeast Ohio is proud to have been able to host this conversation and bring these brilliant minds together. If you would like to learn more about us or stay in touch or support us, visit our website, follow us on social media, or give us a call. We are planning some exciting virtual content for 2021, so please stay tuned. Thank you.